Understanding your credit is essential to ensure you're getting a loan with the best possible interest rate and loan terms that you can, especially on a mortgage. My name is Jonathan Getty, branch manager with Catalyst Lending, and today we are talking about credit once again. Whether you are new to credit or you've had credit accounts for decades, it's important for you to know that time is a significant factor in determining your credit score. Credit bureaus place more weight on recent information, which makes sense. The older a closed account is, the less relevant it is to your creditworthiness. What is often not known is that you can actually hurt your credit score by paying down an old debt or closing an old credit card account. Understanding the time aspect of credit reporting is important to avoid unintended consequences. Let me explain these two most common mistakes: closing accounts and paying old debts. Closing an account that you have had for a long time may seem like a prudent financial move. If you are closing the account because you no longer need that available credit, that is good, right? Wrong. For credit scoring anyways. Having an account with a very long history of on-time payments, even if you do not often use the account, is a very big positive on your credit score. If you close the account, the average age of your accounts will go down, and with each passing month, your good payment history on that account becomes less and less impactful on your credit score. Both bad for your score. Paying on an old debt seems like a good idea too, right? When it comes to credit reporting, not always. If you have an outstanding collection or charge-off on your credit history, the older the account is, the less it is affecting your credit score. When the collection or charge-off account is reported to the credit bureaus, the creditor will report the date of last activity, which is the date that indicates the age of the account. If you pay on a debt that has been inactive for 5 years, the account will now be reported with today as the date of last activity, indicating it is a current account instead of an account that has been dormant for 5 years. Since recent activity is given more weight when calculating your credit score, you can actually hurt your score by paying an old debt. While paying your obligations is always the right thing to do, you don't want to hurt your credit score in the process. Make sure you understand how your actions will be reported on your credit report before proceeding. Go to my website, catalystlending.com/credit, to find other helpful tips for improving your credit score, including the best way to pay off an old debt. Get a free consultation or complete an application